Hello, welcome to America First Wealth Management Investment Outlook for December 9th, 2024. My name is Dan Lew. I'm the Chief Investment Officer and Portfolio Manager at America First Wealth Management. This is our standard disclaimer. This material is intended only for informational purposes, and we're not recommending to purchase or sell any securities or providing any investment advice. Our opinions are subject to change as market information and the environment changes. What we like to do is start with our market outlook for the upcoming week and provide additional supporting data after our conclusions. So what we're seeing is the Trump election rally after the election continues, and last week plans to appoint an AI and crypto czar put the spotlight on these two areas for investment. We saw a lot of activity in that space. Additionally, a big item that occurred was Amazon threw their hat into the AI ring, launching their AI offering called Nova. Why that's significant is a $1 trillion market cap company going into the AI space, albeit late, but very significant because of Amazon's influence on the internet and computing with AWS is quite significant. So we saw a lot of activity in the AI space last week. Yesterday, President-elect Trump gave his first sit-down interview with Meet the Press since winning the election. And just to summarize the key economic insights that we heard while we listened to it, Trump is focusing on rolling back energy regulations, his drill baby drill mantra that he espoused during the election campaign is top of list in terms of some of his economic priorities. He did indicate that he would not raise the minimum age for Social Security or Medicare, so that's a sigh of relief for many seniors or those nearing retirement. Trump did agree that the federal minimum wage number was too low, so we might see some potential for that number going up once he's elected. On the issue of the ACA or Obamacare, he kept open the possibility of replacing it if they found something better. In the area of NATO, he continued to suggest that the U.S. could leave if other members do not increase their defense spending contributions. He also commented during the interview that he was upset that the U.S. was spending more on their defense, and these countries were not contributing, nor were they supporting us in terms of trade by purchasing American goods and services. On the issue of tariffs, Trump said that he could not guarantee that they would not increase consumer costs. So that continues to be an issue for potential future inflation if the tariffs start increasing consumer prices. He also stood by his somewhat controversial picks of Hegseth, Patel, and Kennedy as cabinet choices. And I say controversial because the media has been somewhat biased in attacking those choices, but he's standing by them. And these choices certainly have implications in the areas of the military, FBI, and healthcare. So those are important cabinet choices that could certainly impact the economy, as does his selection of Elon Musk and Vivek for the Doge cabinet positions to look for areas of government spending that would increase efficiency. Doge being the Department of Government Efficiency. Turning to some of the macro data, last week's employment data, the jobless rate was 4.2%, edging up slightly from November, certainly supports the 25 basis point rate cut by the Fed anticipated on December 18th. And certainly as long as the CPI number this week for November is not an upside surprise. So then turning to the key macro data points this week, Wednesday we have core inflation, CPI, as I just mentioned, and the inflation rate. And Thursday morning will be the PPI number. So these data points will be important and supportive, hopefully, of the rate cut next week on the 18th. There are a handful of key S&P 500 companies reporting this week. After the close today will be Oracle. Tuesday pre-market AutoZone. Wednesday after the close will be Adobe and Nordson. And Thursday after the close will be Broadcom and Costco. So certainly data points to watch. This was the announcement of Trump's plan to appoint David Sachs, who is a key Elon Musk confidant, and that's going to be pretty supportive, we believe, in the AI and crypto space. And this was the headline announcement for Amazon's Nova, a new family of multimodal AI models. And we're seeing this with many AI models out there. They offer a free version, a light version, an advanced version, depending on the level of usage. So to us, it seems like a lot of me too. Here's my AI model. Here's my subscription plan. But the fact that Amazon's jumping in is certainly a trillion-dollar market cap, giant rock being thrown into the AI sea, creating many, many ripple effects. We're seeing a lot of activity, especially among AI software names, which we were anticipating, especially after the large movements in AI hardware and data center plays, and also the utility energy plays. So seeing software plays getting some attention from investors is no surprise, and we expect a rally in these software names to be probably dramatic, given that we're in the last month of the year and many investment managers are looking for high-performing potential names. So this space could be an area of volatility and rapid performance increase. Turning to the weekly market stats ending last week, we saw somewhat of a mixed bag with the Dow being down, S&P, NASDAQ, and NASDAQ 100 up, and small caps, as measured by Russell 2000, were down for the week. Large growth stocks dominated, as measured by the 1000 Growth ETF, and value stocks lagged, down almost 2%. Certainly among the poorer performers, investors are clearly running into the end of the year preferring growth and momentum names. International stocks were up 1.4%, and the aggregate bond index was up slightly. You can see for the quarter to date, NASDAQ is a clear leader, followed by large cap growth names measured by the 1000 Growth Index. And it looks like a clear run, as I mentioned again, growth and momentum names through year end. Next year will be interesting to see how things shape up, to see if investors are looking for alternatives. But right now it seems clear that growth and momentum names led by technology, AI, looks to be the clear winner. Magnificent Seven names for the week. Tesla was a clear leader, up 12.77%, making up a lot of ground, and year to date has now moved up towards the top of the pack here. Leader being NVIDIA, followed by Meta, and now in third place is Tesla. So that's a big, huge comeback, especially after the election. Elon Musk and Tesla are probably the best performer post the election. And you can clearly see that in the quarter-to-date numbers for Tesla, as well as the month-to-date. Turning to sector performance, consumer discretionary stocks were the clear leader for the week, followed by technology and communication services sector. All of the sectors were down. You had to be a stock picker. You had to bet on the consumer spending and technology and communication services sector. So we had a narrow advance, but an advance nevertheless. S&P 500 post-election continues to rise. And this is a one-year chart for the S&P, which continues to look very positive and favorable. But turning to the RSI at the bottom, we are entering overbought territory, which, as you can see in the past, we can bump along there for a while. But the moment we break above and turn below, that might be a good signal to take some risk off the table, especially if we also see the top line S&P 500 breaking below the 10-day moving average, which is another indicator we like to track. Turning to the Treasury yield, 10-year Treasury yield was down 3 basis points last week, ending at 4.15%, down 3 basis points from 4.18 a week ago. Year to date, we're still up slightly, up 27 basis points. We are still below the 10-day moving average, which is a bullish indicator for interest rates in our opinion. And we do believe that if we get the 25 basis point rate cut next week, we do anticipate Treasury yields to drop further, even at the long end. Yield curve change week to week, not too much. As you can see, the top two lines being the last 2 weeks are virtually overlapping and up slightly from the prior quarter. Economic calendar, which I highlighted the important data points being Wednesday, the inflation numbers, and Thursday also PPI. Kind of quiet on the macro front except for Wednesday. S&P 500 earnings, as I mentioned here in the start, this shows the consensus estimates. Oracle looking for $1.48 versus a year ago, earnings per share of 134. AutoZone looking for 33.56 versus 32.55 a year ago. And we'll run through the rest, but here it is: Adobe, Nordson, Broadcom, and Costco. The exception of Broadcom, we're looking for up earnings across all of the companies reporting for this week. And that concludes our weekly investment update. If any financial advisors are interested in signing up and being notified of these reports and our outlooks, please go to AmericaFirst.fund to sign up. And if any advisors or prospective clients are interested in learning more about our products and services or schedule a one-on-one call with us, please contact myself or Jim Monahan here. Our emails are listed. Thanks everyone for tuning in, and have a safe and happy week investing. And we'll see you again next week. Take care.